The Dow is only down 240 points. Earlier this morning, before the market opened, pre-market action showed a 500-point loss for the Dow. We're down 250 as we speak. The Nasdaq Composite up almost 50 points. Jeff Sica joins us, our market watcher, this Monday morning. Jeff, historically, going all the way back to 1945, when you get some kind of major leagues geopolitical military event, the market bounces back very, very quickly. Within a month, it's bounced back to where it was before. Do you expect the same kind of bounce back with this market now?
Well, Stuart, what I see with this market is, keep in mind, when everything came out, the market went very bearish. The bearish sentiment in the market went back to March of 2020, and then the market rebounded. What I see is a lot of times what Wall Street will perceive is the worst possible outcome. They'll read the headlines. The worst possible outcome will become the most likely scenario. When it doesn't happen, then what you have is you have a lot of these people who sold short, bet against stocks. Now they have to buy back so they could protect their downside. So you get a lot of rally off of that. But you also see that a lot of times perception is reality for the market. So if the perception changes, for example, what I see is initially we anticipated that Russia was going to bowl over the Ukraine. They were going to bowl them over in a day. Everybody was said Ukraine would fall in a day, and you have Ukraine standing firm and fighting them like dogs to beat them. So now they're starting to see that maybe this Russia we're so afraid of, they could be handled, and there's a more optimism.
There's just so much risk of unforeseen events. An errant missile goes into Poland, just for example. I mean, that would set the cat amongst the pigeons, wouldn't it? The destruction of Kiev by Russian armor, that would not go down well on the markets either. So investing at this point is a real dangerous occupation, isn't it?
Yeah, I mean, I think investing should always be considered dangerous. It's especially dangerous now. Yeah. But let's keep in mind that we have other things to be concerned about. Now we're so focused on Ukraine and Russia when we in fact have an inflation issue that, to me, for my investing, I look at the inflation issue as being a bigger concern because it affects everybody in the U.S., the consumer.
So what is your best inflation hedge? Bitcoin, cryptos, or gold?
One thing that gets the hair on my neck to stand up is when people call Bitcoin a hedge. And at one point, I was one of those people who said it's a hedge. It is no longer a hedge. It is very, very correlated with the stock market. And the people who buy Bitcoin, they might love Bitcoin, but they love leverage even more. So they're borrowing to buy it. So you see the market, especially tech stocks, the speculative market, sell off, Bitcoin sells off with it. Gold, on the other hand, I mean, keep in mind, gold is the biggest owner of gold bullion is Russia and China. Gold, on the other hand, which is hitting an interim high, is very different. I think people should really be taking gold seriously right now, because gold, to me, is a hedge against government incompetency, and we see that paraded in front of us all day, every day.
Jeff, I've always taken gold seriously. Always. I like the feel of it, you know what I mean? Jeff Sica, thanks for being here. Appreciate it very much.